Okay, Mayor, you have joined? This is Nippon India Mutual Fund, expense ratio 0.74. What is the category average? 0.89. Okay, and riskometer very high because this is investing into equities, so it will be always having the highest risk. Now, just read this large cap fund. Akriti?
Yes, sir. Large cap fund, the fund has 96.18% investment in domestic equities, of which 63.47% is in large cap stocks, 9.84% is in mid cap, 2.76% in small cap stocks. The fund has 0.72% investment in debt, of which 0.72% is in low risk securities.
Okay, now this is suitable for the investors who are looking to invest in for at least 3 to 4 years and looking for high returns. Okay, now here what we are looking is we are looking for the all-time returns. Okay, what is the all-time you are getting here? This scheme 5 year देखिए. So this figure is not populating. आपकी populate हो रही है figure? हाँ. So I think मेरे में problem है क्या? I'm just going to start it again. So look at for say all. आपका कुछ नंबर आ रहा है? This scheme how much it is offering? अच्छा कुछ I think there is some miss out because it was giving a return which is not coming out here. 5 year में देखो. अब this scheme in 5 years is giving 25, but all is becoming zero now, isn't it?
Yes, sir.
So there is some, this site has there's some issue which is coming up, but it is giving you, it will give you what kind of return it is given, okay, that the scheme versus the benchmark. Okay, fine. So maybe it is at the moment it is not behaving properly. There's some issue. I think everyone is having the same problem. I mean, if you just look at your computer, सब में यही दिखा रहा है अभी.
Yes, sir.
Okay, so I think there is some glitch which is coming out here. Okay, fine. So all-time return, the top 100 companies. Now this scheme is not giving. The scheme is giving around close to about 15% return. Okay, all time. And the top 100 companies in India has given average return around close to about 12.5%. Okay, fine. And the category average is 13. Now, if you are investing into large caps for a pretty long period of time, you are going to get a return close to about 12 to 14%. Okay. Now this scheme is giving you close to about 15%. If you go to our Excel sheet, how much return it was giving you? So it was giving you, Nippon was giving you how much? 10-year 13% return, isn't it? Can you see this Excel sheet on the screen? Hello?
Yes, sir. Yes, sir.
Okay, okay. So that means if you invest in a large cap over a almost like 10-year horizon, so you are going to get a return close to about 13%. Okay, fine. So previously it was getting around, between 12 to 15% is kind of a return norm of a large cap funds. Okay. And, all the funds are, I mean, most of the funds are giving around close to about 13% return, isn't it? Okay. So let's go back to again Nippon because this is not behaving properly. So that's why I thought that we can again recheck that. Okay. Now go down. If you look at a graph here, okay. So this is the blue one is Nippon and the red one is the benchmark. Okay. So it has, this is BSC top 100 companies of India versus Nippon. So which is giving you more return, the top 100 companies or Nippon fund?
Nippon.
So it has beaten the benchmark every time, isn't it? Okay.
Yes, sir.
Then look at the return it is given, on a weekly basis, monthly basis, 10-year basis. Now look at the return it has given since inception. Now here the figure is coming, okay, category average, that figure which was missing on that block, it is given, the category has given around close to about 13.5%, and this fund has given annual return of 12.55%, and 10-year return is close to about, this is Nippon only, now, okay. So these are the returns which are given, okay. Fine. These are the SIP returns. Suppose you would have invested, 100,000 rupees every month for a span of 1 year. span of 2 years, span of 3 years, span of 5 years, span of 10 years. So let's go and focus on 5 year and 10 year SIP. So how much return you are getting annualized?
18.9.
So in 5 years, you got close to about 19% return. If you have had a kind of a SIP with this fund, and 10 year, it's around 15%, which is a good return. Okay, fine. Now look at the tax treatment. Just read this tax treatment.
If sold after 1 year from purchase date, long-term capital gain tax will be applicable. Current tax rate is 12.5%. If your total long-term capital gain exceeds 1.25 lakh, any
Cess. Any cess.
or surcharge is not included.
Any
If
cess. Yeah.
some
Okay.
If sold before 1 year from purchase date, short-term capital gain tax will be applicable. Current tax rate is 20%. Any cess or surcharge is not included in the 20%.
Okay, now, if you are going to put your money into equity mutual funds, okay, where, like 65% or more of the money has gone into equity funds, which are predominantly equity funds, then if you invest your money for a longer period, then whenever you sell them and make profit, you have to pay 12.5%. You have to pay 12.5% as tax. Okay, but up to first 1,25,000 of kind of a capital gain is totally exempt. So the first profit of, suppose I say example, suppose you have invested 5 lakhs and it has gone up to 10 lakhs. Okay, so how much is the capital gain? How much is the money you're making? 5 lakhs, isn't it?
Yes.
Now, how much will be exempt? 1.25. What is the balance? 3.75. 3.75 का जो tax होगा, let me just explain through an Excel sheet. Okay, fine. Let me just put this figure on an Excel sheet. This tax is very important and you must know always. So, if you are, there's something called long-term capital gains. Capital gains. Okay. If you hold the equity shares for more than 1 year, okay, if you sell them after 1 year, okay, so if you make a profit, it will be classed as this thing. The rate of tax is 12.5%. Okay, 12.5%. And up to 1 lakh 25,000 it was? 1 lakh
Yes, sir.
25,000 is exempt. Now, and the other one is called the short-term capital gain. Short-term capital gain. Okay. Now, if you hold the stock less than 1 year, okay, then if you make a return, a profit, it will be taxed at 20%. Okay, and there will be no exemption here. Fine. And of course, there will be a cess. Okay, cess which you have to pay, which is in both the cases it will be 4%. Fine. Okay. But if you are in a very high bracket, you have to pay a surcharge also, assuming that you are not in a high bracket. So, for example, let's say that you have bought some shares or equity mutual funds. Okay. So let's say equity mutual funds. Mutual fund. Suppose you bought Nippon. Okay. Let's say you bought Nippon mutual fund. Okay. So you had invested, say, 5 lakh rupees. Okay. And now you sold it at 12 lakh rupees. Okay. Fine. So what is the profit you are making? This. Okay. So 7 lakh is your gain. Okay. So this I am saying your gain. So how much, will be exempt? 1,25,000. Fine. So what will be taxable? This minus this. So this is taxable. And how much tax you are going to pay? This into 12.4%. Okay. And on 71,480, you are going to pay additional 4% tax, which is cess. So what will be your tax liability? Which will be this plus this. Okay. Is it clear? Suppose you have bought Nippon for 5 lakhs and say about 5 years back or 3 years back, and now you're selling it for 12 lakhs. So your total money you have made is 7 lakhs. Okay. For the first 1,25,000, this is the entire exemption for whatever mutual funds you have bought. Okay. It is not be per mutual fund. It is all the mutual fund you sell up to 1,25,000. They will be exempt. So what will be your taxable profits? 5,75,000. Okay. And what return? What kind of a uh, tax you have to pay? And this is 4%. Okay. So you have to pay 12%, 12.5%, isn't it? 12.5%. So 12.5% is this tax, 4% is this. So total tax liability will be how much? 74,750. Okay. Is that clear?
Yes, sir.
Now you may have some other income also. Okay. But on capital gains, you are going to pay only 12.5% plus 4% charge. Is that okay?
Yes, sir.
You may fall into 10% bracket, 20% bracket, or a 30% bracket. Okay. But irrespective of the bracket, you are going to pay tax at 12.5% on the capital gains from mutual funds. Clear?
Yes, sir.
Now, only one thing is that suppose you don't have any other income. So, there's an exemption limit of say 2,50,000. Okay. Fine. 2,50,000. I'm just giving a hypothetical case that you don't have any other income. You have only the income from capital gains. Then you don't have to pay any tax because this money which you're earning. Okay, now, oh, sorry. So this is, you have to pay. I'm just writing it here, 2,50,000. Okay, so you will be paying tax only this minus this. Okay, then your tax liability will be this into this. Okay, and the surcharge will be into this, and your tax liability will be this. So I'm just explaining again. In case if you don't have any income from any sources, only from this Nippon, up to first 2,50,000, this is the basic exemption limit which is given under the Income Tax Act. So that means first only the difference will be subject to 12.5% and 4%. Is this clear?
Yes, sir.
Okay. Now assume that you have invested 5 lakhs into mutual funds and you have sold it for say 7,50,000. Okay. Suppose this is within 1 year. So this is say 9 months. Okay. In 9 months, you made a profit of 1 lakh from say 5 lakh to 7 lakh. So what is the difference? Difference is this minus this, 2,50,000. So you have to pay a tax which will be 2,50,000 into 20%. Okay, fine. And you have to pay again a cess of 4% here. So your tax liability will be this.
Sir, 1,25,000 will be exempt.
No. In short term capital gain there will be no exemption. Short term capital gain में कोई exemption नहीं है.
हाँ हाँ हाँ.
Have you understood now? So I'm just reading this again. I'm just going back to the money control there. Okay, and just read it there. Okay, and you will find now. And now you'll understand what is written there. Okay. Sorry. Okay. Just read this tax treatment, Ritesh.
It's sold after 1 year from purchase date. Long-term capital gain tax will be applicable. Current tax rate is 12.5%. If the total long-term capital gain exceeds 1.25 lakh, any cess or surcharge is not included. If sold before 1 year from purchase date, short-term capital gain tax will be applicable. Current tax rate is 20%. Any cess or surcharge is not included in the 20%.
Okay. Now he says that any surcharge or cess is not included because he's saying that that is separate. Okay, 4% and surcharge depend upon only if your income is beyond a certain threshold, you are required to pay a surcharge. Otherwise, not. Okay. So So now tell me, I mean, Ritesh or anybody, Abdul or this thing. So if you buy a mutual fund, when you pay the lowest tax rate, you sell it below before 1 year or after 1 year?
1 year after 1 year.
And how much tax you have to pay?
12.5%.
And what is the exemption here?
1.25 lakh.
Okay, up to 1.25 lakhs of the profit, you don't have to pay any tax. Beyond that, you have to pay 12.5%.
Yes, sir.
But if you are selling a mutual fund within 1 year, you have to pay 20% surcharge.
20%.
Tax. Okay, fine. Okay. Now let's look at the portfolio where all the money has been invested. Okay. So an equity 96.18% has been invested into equity market. Debt 0.72. So this can be a liquid funds where the money is like cash. Okay. Others 3.1. So now this is the total investments. Huh?
So this exemption is being granted from the like government side only.
From the
The exemption
yeah yeah. It is from the government. It is the as per the Income Tax Act.
okay.
Okay, when you are furnishing your return, when you are filing your return and you have to pay the tax, you take 1,25,000 rupees exemption. Okay, fine. It is under section 1112 something. Okay, I'll just talk about because I'm also teaching corporate taxation to the BMS students. So I'll just show you the slide where I. Okay, now let's come here. Okay, so where all the money has been invested, which is the top stock which they have bought, Akriti, Ritesh,
HDFC Bank.
and you know how much terms of percentage, how much has been invested?
9.9%.
Okay, and which is the second one?
Reliance Industries.
So these are the stocks like HDFC 9%, Reliance 6%, ICICI Bank 6%, Axis Bank 4.5% like this. Okay, and you have a complete list also. You can just see the total amount of money has been invested up to the last penny. Okay, you can just see that. Okay, so it is giving you a little bit more detail here. Number of stocks. How many stocks they have invested into? 7 stocks. Okay, fine. And the top 5 stocks they have put 30% of the money. And top 10 stocks they put 45%, and top 3 sectors 34%. Okay, now these are holdings. Okay, fine. So view complete holding. Okay, so just press this and you'll have the complete holding. So it says the holding. Okay, all the stocks right till the last stock is the holding. So it will give you a complete list. Okay, now if the like if the fund house is going to give all the details, then you can also replicate it. Instead of buying a mutual fund, you could have bought directly these stocks, isn't it? So if you get a complete equity portfolio of this fund, which is doing so good, then you could have done it yourself. You know that where the money has been put, HDFC, Reliance, but this data is a 1 month old data. Okay, so they don't update this data every day. There is a 1 month lag. Okay, so that people cannot replicate, and because this there is a strategy of all these funds, so the people cannot know the complete strategy, so they only know a 1 month old data. So this data has not been updated. So look at this at the top as on 31st of March 2025, and today is what day? 14. So this is still about 15 days back portfolio. So this is not updated. So this is updated say after every 15 days or after 1 month. Normally they do it after 1 month. So this is good that they have updated up as on 31st of March. And then you can even see the sector wise also. Okay, fine. So sector wise, which is the main sector where they put the money?
Finance sector bank.
Yeah, the banks, they put almost like 7% of the money is in the bank. And which is the second biggest sector? IT sector. Okay, so now you can have the sector-wise data also, and then you can always look at like for example, you can just click on the share also. Okay, and then you can have a complete detail about the shares. How it has progressed, how much return it has given. So it will give you a deep analysis about each and every stock also. So I think there is some issue with the net here. So it's not updating. Okay. So I'm just going back to now here, this thing. So now we have, like large cap. Okay, fine. So the second one is now, how do we measure? How do we find out which is the best? Now we know that, Nippon, like, or in other mutual funds which are given the top three, we can choose and invest. But the best way of doing is going to the risk ratios. Now go to the risk ratio and press this. Have you done?
Yes, sir.
And then go and download the risk ratios also. Okay, download this risk ratio and just go to the Excel sheet, risk ratios, and open the file. Okay, just open. And what I'm doing is that because I had opened earlier, so I'm just putting it again. I'm opening this file which is called loaded. Okay, so you'll have this file. So delete the top row, delete the top row, delete the section B and C. Okay, fine. And then select everything, right up to this ratio, and then go to the bottom and make Control T. Okay, this click should be there. My table has headers. Okay, and then you change the color which you like the most. Okay, fine. Have you done it?
Yes, sir.
Okay, so I'm just opening the old one where I've done some analysis there. Okay. You have this. Okay, so this is, and you can call this sheet as risk ratios, and you can just put both the files in the same file. Okay, so risk ratio. So you can just copy this file into the large cap fund. So both the files are there. Okay, so you can just copy this and take to the historical return file which you had just made. Okay, the first file, and put it along with that. Go to the second one and place it here. Have you done it? So after you have done it, just confirm.
Done, sir.
Okay, and then you can just rename this if the name has changed because it's a new sheet. So put this, you can say risk. Okay, and the file name you can make it, this you can say return. So there is a risk and there is a return now. Okay, the file you can make it to large cap. Okay, save this file as large cap. Put the name of the file as cap. Okay, so this should be large cap. So all the large cap, file has been created, which has, two sheets. One is called the return, other is called the risk. Okay, so come back to the risk. So if you have done it, just let me know.
Yes, sir, done it.
Okay, so now you will have the name, all the schemes. Okay, so the schemes will be all, 33, 34 schemes are there. So you can just go and see there are about 30 schemes. Okay, fine. Now there is a rating. Okay, category you can just delete because you don't want, because everything is large cap. We know that this is large cap. So we have now standard deviation, beta, Sharpe ratio, Jensen alpha, trainer ratio. There are three ratios. Okay, fine. Sharpe ratio, Jensen alpha, and trainer. Okay. Of course, there are standard deviation and beta is given to you. Is all this is given in your statement?
Yes, sir.
Now, if you have to analyze which is the best, so go to the Sharpe ratio and just press largest to the smallest. Okay. So which fund has the highest Sharpe ratio?
Nippon India.
Okay. So I'll tell you what is Sharpe ratio if you don't know. The Sharpe, fund which has the highest Sharpe ratio will be the most best one. okay, followed by the other one. So as per the Sharpe ratio, Nippon is considered to be the best. Second is DSP 100, and then ICICI Prudential. Okay, I'll explain you what is Sharpe ratio. Then go to Jensen Alpha and press largest to the smallest. So which is having the highest Jensen Alpha? 6.5 followed by Nippon. So that means this fund has created a 6% alpha, and this fund has created 5%. So let's take you to the alpha first. So are you seeing this screen on your this thing? So this is the benchmark. Okay. Now, suppose, for example, let's say the Nifty given a return of about, say, 10%, and DSP has given 16% return. Okay. So that means it has beaten the Nifty or beaten the top 100 companies. Sorry, not the Nifty, the top 100 companies. It has given 6% more than the average return of the top 100 companies. That's called the alpha. Okay. Which means I'm just telling you again, now it is 6.15. One way to interpret is that this fund has created an alpha of 6% more than the benchmark. And the benchmark is BSE 100, for example. The top 100 companies of India has given, say, 10% return. This fund has given 16.15%. Is that clear?
Yes, sir.
So if you look at this graph again, so now you'll follow. So this I have made a graph here. So it has, it has beaten the benchmark. I'm just going to make this graph a little bigger. So, here it's a fund manager's ability to deliver higher returns than the benchmark. Okay, fine. So, you would like to put money in that fund which is doing, better than the benchmark itself. Okay, so that's called the Jensen Alpha. So, which is the second best? Nippon, 5%. And followed top is, now we get the trainer ratio. So, trainer ratio also we say from the largest to the smallest. So, highest trainer ratio, which fund has given? Again the same. Okay. So, are you aware of what is Sharpe ratio and trainer ratio? Yes or no? Okay. So, this is the formula for the Sharpe ratio, which is, for example, I'm just going to say here, I'm just going to put here mark this thing. Suppose, Nippon, let's say Nippon. Okay. So, Nippon has given, say, 17% return, for example. Okay. And the risk-free rate or the government bond, say, for example, a government bond, I'll say government bond, a 10-year bond, okay, is giving around close to about 6.5% return. Okay. Suppose if you invest your money in a government bond, 10-year bond, okay, why we talk about 10-year? Because, Nippon is also giving you a return over 10-year period close to about 17%. Let's say, assume that. Or let's say it has given you about 15% return. So how much return you have got more than a government bond? This minus this. How much return you have got more than the government bond? 8.5%. See, you have put your money in a mutual fund, which is riskier. Now, the first choice, what you would have put a money in a government bond, which is the least risky. It's the risk. This is the risk-free rate. This is the risk-free return, which you could have got it, but putting your money in a government bond. How much extra you're gaining? 8.5%. Okay, fine. And then we look at the standard deviation. Now, what is the standard deviation of Nippon? Let's go back and check out. Nippon का standard deviation है 0.85. Okay, 0.85. Sorry, this is Sharpe ratio. Nippon is 13.18. Sorry, कहाँ चले? So how much is standard deviation? Say 13 point something. Okay. Say 13 and a half was standard deviation. So what we do is we divide this return, okay, this return by this 13.5. So we get some number. Okay, fine. So this is, if you look at the formula here, let's see the formula. What is the formula? Just read this, Akriti.
The Sharpe ratio is average of the return minus best available rate of return of a risk-free security divided by standard deviation of the return, the investment.
Okay, so that means this is a a return. So how do we call it? We call it return per unit of risk. Okay, so this is actually risk adjusted return per unit of risk adjusted. So we can just say by a name, return risk adjusted return per unit of risk. So what is written? Risk adjusted return per unit of risk. Suppose I'll just explain here. Okay. Suppose there are two stocks, X and Y. Okay. Now you expect a return, say the expected return of this stock is making it a little bigger. So expected return of this stock is say 20% and this is 25%. Okay. Let me put it in the center. So if these two numbers are given to you, so where you like to put your money? In X or Y?
Saying why?
Okay. Now if I tell you that the standard deviation of this stock is 15% and this is 30%. Okay. So now, here you are taking, and I just put it in the center again. Here you are buying the stock which is giving 20% return, but with a volatility of 15%. So risk is 15, return is 20. Here you get 25% return, but the risk goes up, double up. Okay. So how do we find which is better? So what we can do is we can just divide this return divided by risk. So, and then look at here. Sorry, divide this by this. Sorry, this return divided by risk. So this is, so which number is greater? This. Okay. So this is 1 and I'm just going to make it little bit this thing better so that you can. Oh, no. And just put it in a center here again. So what does this mean? This is 1% return for 1 unit of risk. And this is 0.83 percentage of return per unit of risk. Now tell me which is better stock, X or Y?
X.
Because here you are earning 1%, 1.3% per unit of risk. एक यूनिट रिस्क देने में आपको एक 1.33% रिटर्न मिल रही है और यहां आपको मिल रही है 0.83. Of course, this is 25% return, this is 20, but when you calculate this ratio, so it will tell you that this stock is better. Now, what is they have done is, so if I say I add risk-free rate here, government bond rate, okay. Now, government bond rate is say, what was the rate I said in the top? 6.5 or whatever. 6.5. Okay. So let's maintain 6.5. So 6.5. Now what I do is, and here also I put 6.5, okay, and make it center. So I'm just calculating the Sharpe ratio, okay, and make it center. So here what I do, I make an adjustment to the formula. This is 20% minus risk-free rate and make a bracket here, okay, and divided by the standard deviation. Standard deviation. Then I have a number here. Okay. कुछ गलती हुई 20 minus risk free rate. Okay. And I have to make a bracket here. ब्रैकेट पूरा डालेंगे ना और डिवाइड करेंगे स्टैंडर्ड डेविएशन से. डिवाइड बाय स्टैंडर्ड डेविएशन. Okay, this is called the Sharpe ratio. Sorry, I just got this thing. So what you have to do is you have to take the expected return or the return of this of the mutual fund minus the risk-free rate divided by the standard deviation. Now what you will get is Sharpe ratio. That means how much return per unit of risk you are getting after adjusting for risk. Is that okay?
Yes, sir.
So this is the formula. Okay. So the Sharpe ratio is here. Okay. So then you look at for the Sharpe ratio, which is at the highest Sharpe ratio, will be the best one. Okay. And which are the funds which are going to avoid. So you can just even put it in a, let's say, smallest to the this thing. So the funds like Axis Blue Chip is giving you a very low Sharpe ratio. So you don't buy them. Buy them only those companies which are giving you the highest Sharpe ratio. Okay. Now you got it.
Yes, sir.
So the Sharpe ratio is a measure of which fund is better. Okay. So the return per unit of risk after adjusting for the risk, how much you are getting. So higher the Sharpe ratio, the better is the fund. Is that okay?
Yes, sir.
Now, yes, sir. Since you invest in a portfolio, so you are not interested in standard deviation. You are interested in beta, which is also a measure of risk. So replace the standard deviation with beta and you get the trainer ratio. Okay. So look at the formula here. Read the formula here.
Portfolio return minus risk-free rate divided by portfolio beta.
Now, ideally speaking, the trainer ratio should be always better than the Sharpe ratio because a mutual fund is nothing but because in a Nippon there are 70 stocks. Okay. So it has taken care about the this thing. It's a portfolio. So a trainer ratio would be a better metrics rather than a Sharpe ratio metric. But anyway, calculate both and find which is having the best. Okay. So here, so look at Nippon here and go for trainer ratio here and see which is the fund which is giving you the highest trainer ratio. Again, the fund is Nippon is giving you the best. Okay, in terms of both the Sharpe ratio as well as the trainer ratio. So this is the criteria to find out which is the best mutual fund. Okay. Any questions? Please do ask. Have you followed?
Yes, sir. So out of these three ratios, like Sharpe ratio, Jensen's and trainer, which one we should see first and then second?
Now, the Sharpe ratio, the first one is like, the most more important one will be the alpha. How much alpha the fund manager is creating for you. Okay. How much is delivering? How far he is beating the benchmark. So that should be that your topmost. But if he is doing with a great risk, then the risk, if you don't want to take risk, then go with either the Sharpe ratio or the trainer ratio as your main this thing. So it all depends upon the risk appetite of the individual who is investing, isn't it? You can take good risk. Okay, your fund manager has also taken a risk and is generated a very high alpha. But at what price? At the price of risk. Okay, he has increased the risk and delivered a higher alpha. If you're happy with it, it's okay. But if you say that, okay, I don't want to take so much of risk because sometimes it can, give me a low return also, or it can give me a loss. So I will purely go with the ratios, which are Sharpe ratio as well as the trainer ratio. Okay. Or say the trainer ratio is the best because it captures the portfolio. Okay.
So one more question,
Yeah.
the Sharpe ratio is taking the equity side, right? The market risk
Yeah.
and then risk premium. And the standard deviation is also calculated from the equity returns.
Yeah.
And in the trainer ratio, we are taking the portfolio return. So it is taking both into account of debt and equity.
Yeah, definitely. Your question, Abdul, are you Abdullah?
Yes, sir.
Okay, so your question will be answered in the next class when we do the debt funds. Okay, and look at how do we, measure the debt funds. Okay, fine.
So my question is in this is that like if we are taking this full portfolio return minus the risk period, then we are divided by we are taking this another bracket which is beta. So beta is only for equity
हाँ
strategy.
बाबा अब्दुल क्या कर रहे हैं हमें ये कौन सा फंड था दिस लार्ज लार्ज कैप फंड ना and
Yes,
how much money is put into equity almost like 98% of the money is into equity itself isn't it
yes, sir.
so there is no issue okay and it is capturing only the equity equity beta everything okay so this fund doesn't have any issue what you are mentioning at the moment with your question.
Okay, sir. Sir.
Okay, so large cap fund, mid cap fund, small cap fund, they are purely investing into equity. Almost like your 99% of the money is gone into equity. Okay, fine.
Okay.
So here there is no problem that they have contributed, they have put in money into equity, debt also fund. So debt fund is missing here. Okay. So your question is today is relevant. But tomorrow when we do debt funds, we'll look into your question, okay, and answer that. Is that
Okay.
okay? Fine. Okay, so now we are coming to the end of this thing. So what you are supposed to do, kind of an exercise. Okay, before we do that, let's understand some other funds. Okay, and then we close it. Okay, so then we talk about the exercise which you are going to do. Okay, so we have done large cap, mid cap, and small cap. So you can do the similar exercise for large, mid, and small cap, isn't it? Okay. Now the fourth one will be multi cap. Just read this, Akriti.
Multi-cap fund invest a minimum 25% each in large, mid, and small cap stocks. Objective diversify growth across market caps. Risk is high. Ideal for balanced equity investors seeking diversification.
Now, because we all know that, putting into a large cap fund, okay, will give you a return, almost like 13 to 14%. Okay. But if you just go into a medium and small cap, let's talk about, before we do into this, uh, so let's say, a mid cap fund. Okay. We choose a mid cap. Okay. Fine. So we're just again going back to the mid cap. Okay. And then just download this data. Go to returns. Okay. Go to returns and download this. Okay, download this. Have you downloaded?
Yes, sir.
Go to the sheet again and just delete the top heading. Okay, okay. Delete the plan and the mid cap. Delete this and just check this up. Go up to 10 year and say Control T. Okay, and change the color which you like. Okay, have you done? And name this as mid cap. Okay, and go to the 5 year or 10 year this thing tab and say largest to smallest and press 0 0 for all the funds which doesn't have 10 year time schedule here. So do the same thing what we did for the large caps and sort it out. So okay, have you got this?
Yes, sir.
Now tell me which, how much return you are getting in 10-year and 5-year time frame. Which is the best fund? So go to 10-year and just find the fund which is giving the highest. 17. In the 5-year, it's 34%. Which fund? Edelweiss and Motilal Oswal and Invesco. Okay, those funds are giving a phenomenal return. All in 5-year period, they are giving almost like 30% return. Okay, and in 10-year, it is giving around 17%, isn't it? How much was the large cap giving? Close to about 13%, 12.5%, 13% return. And how much in mid cap giving? In 10 years, 17. In 5-year, 34% return. So which funds give you a higher return, mid cap or large cap over the long term horizon? Okay. Now just save this file. Okay. And close this and go back to again to the screener. Sorry, to the mic. This thing,
Money control.
money cap. Okay. Now go to the small cap. Okay. Let's see the how much the small cap gives you. Go to small cap. आज हम ये करेंगे बाकी आगे नहीं जाएंगे स्मॉल कैप आ रहा है 11 स्मॉल कैप ओके go to small cap and download the data for small cap save it save new one have you saved it इसको डाउनलोड कर दो और डाउनलोड करके इस फाइल का नाम रख दो स्मॉल कैप ओके सो दैट इट गोज टू अ सेपरेट फाइल डेस्कटॉप पे स्मॉल पे सो वेयर इज माय फाइल स्मॉल कैप हाँ here so open this file okay and just delete the top line just like we did it for the earlier and delete this mid and direct line and everything also delete this and call it this as a small cap okay and again choose this all up to 10 years and say control T and say OK and change the color okay go to the 10-year period or 5-year period first or 10-year first sorry and make it 0 0 everywhere and select 10-year period okay now how much return you are getting which is the best
20.
Nippon India small cap okay how much 20% okay
Yes.
and 5-year 39 now tell me which funds are giving the best in a 10-year
Small
frame
cap.
the small cap it is given how much 20% how much was the mid cap giving
17%.
okay and how much was the small cap giving large cap giving
12 point something.
something 12 or 13% okay
Yeah.
so now 13% in large cap in mid cap 17 in small cap 20% is that
Yes, sir.
so but what is the difference in small cap the risk is more okay but you get a higher return almost like in a 10-year long horizon period you get 20% return but in case of I'm just opening again the small one okay so that is what the fund says that if you invest in small caps the volatility increases but over the long period term the small cap will give you a higher return okay compared to a mid cap and small cap okay I'm just opening here it's not me so the small cap is giving you in 5-year 39% in 10-year 20% and mind you this is after almost a correction of about 15 to 20% in the last 1 year. There is a 15% correction which has happened into small cap, mid caps stocks, or maybe more than that. Okay. Despite that, these mutual funds are giving you around 40 and 20% return. Okay. So over a long period, the risk goes off. So if you look at the 10-year period, then which is the best? The small cap, followed by mid cap, and then by the large cap. Okay. So if you want to invest, where you would like to put your money? Large cap, mid cap, or small cap? If you have a very long term horizon. I'm asking a question. If you want to invest and you have a 10-year time frame, you don't require the money. Okay, so where you would like to put your money? Small cap, mid cap, or small cap, or large cap?
So divide between mid cap and small cap.
Huh,
So it will depend on the risk capital.
No, again, Akriti, the first somebody said divided in mid and small cap. That is a better answer. Okay. Now, risk appetite is also a very good answer, but the risk goes off in a long term period. Okay, it's a 10-year period where all kinds of ups and downs have happened, and the small cap have corrected almost by on an average 20-25%. Okay, some stocks have gone down by 50% even. Despite that, you're still getting a very good return of 20% in 10-year period. All your risk kind of things have to be taken care. In spite of that risk and downfalls and corrections, still you're getting a 20% return. The large cap has given close to about 12.5%. Mid cap 17%. Okay. Now risk has been taken care by these kind of percentages, isn't it or not? Akriti,
Yes, sir.
have you got what I'm saying? That all the risk has been factored into all these returns. The 10-year is a long period. We have seen COVID. We've seen the Trump's kind of a tariff bomb. So many things have happened over the last 10 years. Despite that, the small cap has given you 20% return. Okay, and the large cap has given about 12.5%, and the mid cap has given 17. So going by just that logic, the best would be to put your money in a small cap, isn't it? But nobody will do it. As you know, Abdul said 50-50. Abdul said 50-50. Who said? Ritesh. किसने बोला था 50-50? हाँ रितेश, हाँ ठीक है. नाम बोलो ना. अगर आप बोलोगे मी तो मुझे नहीं पता चलेगा. I can't see you. Okay. So like it will be always prudent to put your money into all buckets, large, mid, and small cap. Okay, like I had put about 1 year back, I had put almost like 50%, more than 50% in mid cap and small caps. But now I've shifted most of my portfolio to large caps. Almost like 80% is large cap, and rest is in mid and small caps. Okay, because going forward, they are saying the mid caps have given the large and the small and mid caps have given a phenomenal return. But over the next 3 years, they are going to be more volatile, and the large cap are more safer. Okay, it all depends upon what is the future outlook of the market. Okay, fine. So that is very important. Like if you look at this, 6 months this thing time frame. Look at the 6 months time frame. Say the smallest to the this thing. So 6 months the small caps have corrected by 20%. Okay, in the last this year they have corrected by almost like 20%. Are you seeing on the screen? So this is telling you that these stocks have corrected by almost like 20% return in the last 6 months. Okay. Now coming to this thing. So you can do this exercise for all large, mid, and small cap, and you have to do it. The exercise would be that I'm just back to the screener and closing the day for the day. I'm just going finally with the screener. Okay. Money control. कितना time है? बस 2 मिनट और है सिर्फ. Okay. So these are the funds. How many funds are there on your screen? आकृति. अच्छा टैग अब थक गए काफी है. Okay, so there are about 11 or 12 schemes. So we have done large cap, mid cap, and small cap. Okay, now we have other schemes like we have focused contra funds, we have value funds, dividend yield. Then we have sectoral. We know sectoral will be always like putting money in a particular sector. Okay, so you have to choose all these funds and do the same exercise. And I'll explain you all others also in the next time. So you do an exercise Okay, choose either large, mid, or small. Choose any three. Okay, and make an analysis of your own. Okay, and you have to make a presentation next week. Okay, once we are through with all these, 11, 12, and through with debt and hybrid also at least. Okay, fine.
Okay, sir.
So there will be a class exercise or a presentation, 20 marks, where you will be making a slides with respect to, analysis of these mutual funds. Okay. Choosing, this you can choose out of the equity only. So debt and hybrid we will be doing where you don't have to make any kind of a presentation or any analysis, which I'll be still teaching you. But for all these funds, you're going to make an analysis, okay, and do through the Excel sheet, okay, and find out the top five mutual funds in each category, okay, and do some more, analysis and make a presentation next week, and this will carry 20 marks. Is that okay?
Yes, sir. So, sir, we have to choose three funds out of equity.
There are about 11 or 12. You're finding them 3, 3, 6, 6, 12. Okay.
12.
Out of 12, choose any three. Okay. Fine. Or any four, whatever. Any two, any three, four, whatever. This is your choice. Okay. Fine.
Okay, sir.
And make analysis and let me know which are the top five funds in each category. Okay.
Okay, sir.
And what is your hypothesis? What is your analysis? And how you have chosen it. Okay.
Okay, sir.
You can choose it in terms of star rating, in terms of risk ratios, in terms of Jensen alpha, in terms of whatever criteria. Okay, fine.
Okay, sir.
And make a presentation. Today is what 18th is next class. 18th के बाद कौन सी class आएगी?
On Tuesday it will be. The 23rd, I think.
23rd आएगी ना? तो 23rd will be okay?
The 22nd it
हाँ,
will be.
22nd is okay?
Yes, sir.
ठीक है, चलो 22nd तक आप ये presentation बनाइए. Okay, I'll.
Sir,
हाँ.
remaining students, they have to present on Friday for this industry valuation.
Absolutely. So you can just put a note on a WhatsApp, though I'll just, give myself a note also. So just give a note for all those, the presentations which are left, they have to be done on the next class, which is falling on next Friday, 18th. And talk about the new project, analysis of mutual funds. Okay.
Okay, sir.
20 marks graded. So you have to analyze any four categories or any three categories of equity funds. Okay. So you have to make a presentation. Okay.
Okay, sir.
So दोनों चीजें आप mention कर देना मैं उसके ऊपर I'll just put my word. Okay.
Okay, sir.
Okay, then see you 18th.
Sir,
I
I have one question.
Yeah.
Related to valuation. Like, when we take EBIT, so it is about the long-term incomes we are getting there, only the operating one.
No, I'm not getting you, Abdul.
Sir, when we take the EBIT of the company,
Yeah.
then do we take only the operating income? So, like you were saying in a video.
हाँ, EBITDA